Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Dan Caplinger and Matt Frankel giving a 1 to 10 rating to the credit card company originally invented by Sears. It's Discover, ticker symbol DFS. Talk about the business first, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. Both of you have 7s. Matt, you follow the industry very closely. What do you have to say about Discover?
Yeah, so a lot of people just think of Discover as like the distant fourth place when it comes to payment processing to Visa, MasterCard, and American Express. And to an extent, that's true, but there's a lot more to the business. They also have a big consumer bank. They have over $100 billion of consumer deposits in savings accounts and things like that. I mean, they have their own credit card business. They're what's called a closed loop payment processor, meaning that they actually lend money. They have over 300 million credit card accounts on their platform. It is a crowded space on both sides. Like I mentioned, they're the distant fourth in the payment processing race, and they are, the credit card space has become very crowded in recent years. But on the other hand, Discover is about to merge with Capital One, and once it's finalized, I might actually give the business a much higher score than 7.
My score is based mostly on my consumer experience with Discover. Discover was my first credit card. I've been a member since 1988, and what I have found is that Discover, it hasn't evolved the way that the rest of the credit card industry has. And so nowadays I hardly ever use my Discover card because my other cards, they pay more in cash back. And so it hasn't really maintained that same competitive edge. It is a strong business. It is a sustained business. It's reliable, but it doesn't stand out. It doesn't really get me that extra point that I would do for an 8 or a 9. Same way on the banking side. I mean, sometimes Discover has the best interest rates. Sometimes they don't. There have been times that I've had bank accounts with them. Right now, I don't have bank accounts with them. I have bank accounts with other providers that pay better interest rates. So it's just one of those things. I do think Capital One is stronger from that standpoint, from the consumer standpoint, than Discover is. I'll be interested to see kind of how the synergy works, assuming that merger does go through, which does look incredibly likely at this point.
Let's move on to management. A 10 is Warren Buffett. A 1 is Homer Simpson. You guys disagree a bit on this one. Dan's at a 6. Matt's at a 9. Why so high, Matt?
I'm not even sure we disagree, as opposed to we're just ranking different things. So Discover's leadership, they're fine. Michael Shepard's been interim CEO since last April. He's fine. There's nothing wrong with him. But as Dan just mentioned, it's very, very likely this Capital One deal closes in the very near future. And I love Capital One's leadership. A lot of people don't realize Capital One is a founder-led bank. It's still run by Richard Fairbank, who founded the bank. He took it public in the early 1990s, has generated over 5,200% total returns for investors in the years since. It's about 14% annualized over a more than 30-year period. So I think I love how he's kind of turned Capital One into the credit card leader by himself. That 9 is based on Richard Fairbank, not on Discover's management in particular.
And like Matt said, I'm not trying to ding Capital One in any way. I'm just looking at Discover as it is today before the merger goes through. I'm not blaming Michael Shepard either. He's gotten brought on to get the merger done. And so that's his job. And once that job is done, then, it'll be up to Capital One to decide what role he's going to have going forward, if any. But I'm turning the clock back a little bit before Shepard came on. One reason why Capital One saw so much potential in taking over Discover, in my view, is that Discover made some management-oriented mistakes that led to pretty stagnant stock performance, a little bit of regulatory controversy. And so I don't want to reward Discover just because Capital One came in and saw an opportunity. In many ways, I kind of feel like if Discover had been better run in the past, then its valuation would have been high enough that Capital One might not have seen kind of the same level of opportunity to get it up to snuff that they do now.
For financials, a 10 is a fortress, a 1 is yikes. You guys agree with a 7 here? Dan, you speak first.
Yeah, one thing Discover has that like a Visa or MasterCard doesn't is some financial exposure to credit risk. And so you'll see my score here is lower than what my scores have been for Visa and MasterCard. But nevertheless, it's got a strong financial, Matt's going to go into a bunch of the numbers. it's got a strong financial performance. I'm very comfortable giving it a 7.
Yeah, like you said, I also gave it a 7. Great profit margins for a bank, especially. Net interest margin is about double what most banks are. The loan portfolio, it's grown significantly over the years, up about 37% since 2021. A lot of people don't realize just how much deposits Discover has. It's about $110 billion of deposits. That almost covers its entire loan portfolio. And that's really significant especially for a credit card lender. It's a source of very cheap capital, even at 4% interest rates or whatever they're paying on savings. The debt load is very reasonable. Capital One is also in solid financial shape while we're on that. One thing to watch, though, why I wouldn't rank it higher, default rates have ticked higher since the end of the COVID pandemic. They're not at an unmanageable level yet, but we've seen them continue to trend upward over the past few quarters. And as Dan mentioned, it's a lot more risk than, say, a Visa or MasterCard has, and that's why I ranked it a 7.
Dan, let's talk valuation. How well will Discover do over the next 5 years? How safe is it? 10 is a sure thing. 1's a lottery ticket.
I gave it a 5 to 10% return. That's pretty consistent with my expectations for the market more broadly. Safety score is 6. There's still some tiny chance the deal's not going to go through. I'm not quite sure at this point who's left from a regulatory standpoint or if everybody's just doing documents. But I do think that if that minuscule chance that the merger doesn't go through, if that in fact causes problems, that it is going to be a potential downside for the stock.
Yeah, it is a very small chance. Delaware, where Discover's based, has already approved the merger. It's mostly on a federal and shareholder level at this point, but it's a formality at this right now. I think the 5-year returns are going to be a little bit higher in the 10 to 15% range, really because that's nothing Capital One hasn't done in the past. That's assuming the merger goes through. Safety score, I gave it a 6. I do think a combined company will be even stronger than either one of them are individually. Returns in the 10 to 15% range should not be much of a stretch. The credit card business is risky by nature, so if we do get a recession or something like that, it's not going to be a 10 to 15% return. If interest rates unexpectedly rise, it might not be a 10 to 15% return. So there's a lot that could go wrong, but just based on Capital One's track record and the fact that they're going to be saving significant money annually after this deal closes, leads me to believe that they'll have no problem doing what they do.
It's time for everyone's favorite Top It. Matt, is there a company in Discover space you like more?
This is cheating, but I'd say Capital One.
I was wondering if you'd say that.
Visa for me is the one. I just like the fact that, the credit risk of avoiding the credit risk to me is like a big benefit of having a business model like Visa has. I just, there's incremental profits to be made if you get the risk right, if you take it on like Discover does, but it gives you a little bit more volatility. I just don't want that volatility personally from an investment.
Well, thank you to both Dan and to Matt. They've given Discover an overall score of 6.8 out of 10. I'm also adding post-merger, I think we should do Capital One. I don't think it's in the full universe as a rec, but I know Matt's bullish on it. I think it'd be really interesting. I'd be interested. So look out for that sometime in the future. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Prologis. Till then, Fool on.
Michael, I got bad news.